Hello and welcome to Core 4. I'm Coach Brandon, and I'm here to give you guys another week, another opportunity for us to learn together, grow together, and figure out how we can challenge ourselves to make some incredible opportunities with some financial security, financial growth, financial everything that you possibly can imagine. And so, how can politics make you money? How can we look at all the stuff that's going on all over the world and how do we capitalize on that? And so, Core 4 embodies several things. Now, typically we'd say that you don't want to give custody of your funds to anybody else. Let's just start off with that. Now, obviously, there's opportunities that are out here where you are going to do that if you don't want to be an active investor and you want to be a passive investor. And so, if those opportunities where you're giving something money and it's creating opportunity for you, if that's out there for you, then you have to make sure that you really evaluate it. And so, we have Core 4 tools to do that. And beyond that, we also have relationships. Now, sometimes you're going to have the right relationships and it's going to feel good and you're going to take a risk, and that's fine. But remember, Core 4 stands for mindset. And so, what is that mindset? Are you taking it personally when things don't work out? And if you do take it personally, you have to kind of understand the mindset of what it's going to take to get you away from that, because otherwise, you won't take risks. Life is about risk. And so you want to calculate that risk so you obviously don't get your hand burned. But also at the same time, if you don't jump out there a little bit, you will get absolutely nothing. And our job is to make it so that there's something for you out there. So we talk to you about our journey and the success that we're having. And then we hopefully will give you some ideas on what things could happen for you. The second thing is 9 to 5. I am trying to get rid of my opportunities for any 9 to 5 opportunity, unless it's just purely a labor of love. And so, this opportunity that we're all looking for is how can we work with our discretionary, our disposable capital, and leverage it so that we almost have employees ourselves. So, the idea is that if we are going to deploy something in a particular way, whether it's active or passive, we can actually get a return that is equivalent to the time that we would have spent on the job times 50, times 100, times 1,000, whatever it looks like for you. It doesn't matter. What matters is that you own your time and you own your freedom. And then the next thing is active and passive investing. So active investing is where you're doing the work. Passive investing is where something is doing the work for you. And so you got to figure out what you want. And if you figure out what you want and the type of scenario that you want to grow your capital in, then that's a powerful tool as well. And so we have insurance and we have all sorts of stuff. We have the Core 4 bot, we have options, we have yield farming, we have Nextcloud, Get Fit mining, we have Miracle Cash and more. I mean, there's just so much. And so the idea for you is, what are you going to look at in your journey and make things happen? I mean, all of you guys know that Chris and James are amazing. Listen to what they have to say, because the curiosity is, how are they doing it? And if you can follow their steps, then everything's perfect. So finally, the last thing is retirement. What are you going to do to retire? What are you going to do to retire? What is it going to look like? Is inflation beating what your growth is in your income every year? And will it do that when you've retired? Otherwise, you're going to have to add some years on. So if we're not having this conversation now, when? And so that's the idea. So let's go into the creed really quickly. That's Core 4. That's what we're all about. Excalibur's coming. But let's talk about the creed. So the creed is, become a subject matter expert. It's not going to be overnight. Nobody does that. I'm a subject matter expert in skill development for basketball, but that's it right now. But I'm working on some other skill sets. And then number 2 is, be the best version of yourself. If you're constantly looking to be better than you are today, tomorrow, then we got a shot. And then finally, surround yourself with people who inspire you. And that's exactly what I do every day. And I'm lucky that each and every week I can get you on with Chris Pulver and James Bishop. And so we're going to bring them on right now. So hold on. Here we go. What's up, buddies?
What's going on? How's it going?
How we
Man,
doing?
we got a lot to talk about today, man. We got a lot to talk about. We've been anticipating this particular call. We talked about that the other day, Chris, right? We
Yeah,
knew that this call would be about something very different in the way the country is moving, so that how do we capitalize? And we've seen some changes even before the transfer of power. So, James, I'm really excited to hear what you have to say about it because I know that you've been playing golf at Mar-a-Lago. Have you been playing
I've not played there yet.
yet?
I will say this. I'm
Uh-oh.
like one step removed from being able to play there. So, and I don't care if you like him or love him. The man has an eye for golf courses, and have an eye to like to play golf courses.
Go,
So,
go.
you know.
So if we play, is it okay if I use, my 9 iron since this back is old? I can't be using that driver.
Got to get a bacchiotomy, huh?
Dude, as long as I can hit the ball like maybe 50, 60 feet at a time and y'all not laugh at me, I'm okay.
We'll take you to putt
I
first.
was
That's
gonna
where
say sounds like more of a go kart putt putt
I
adventure.
want to do the real. Okay, you know what? Let's get on the basketball court. Y'all want to?
okay.
There you go. We bounce out. Look, y'all want to shoot free throws? We can shoot free throws. I want to use a 9 iron, and I want to hit that thing all around the course.
That's
There you
fair.
go.
9 irons more like shooting layups, dude.
I know y'all are going to teach me some things. Well, let's go. So we had a really wild thing happen, and that was this election on Tuesday, right? And so I want to kind of dive right in. So this election, it surprised me. I didn't think it was going to be, the popular vote and the electoral vote. I didn't really think that. So I was like, wow. And we've talked about it before with Vegas and the odds and all the rest of the stuff. So, there was kind of a foreshadowing of this. And I just think that it's, a unique turn of events. I'm not as like shocked as I was the first election. But what are your thoughts on this? I mean, like, not from a personal basis, but can we make some money from this politics, this transfer of power that's about to happen?
Yeah, absolutely. I think you're already seeing, some. So there, like I have a dichotomous view here that I'll talk about, but you're already seeing Saudi Arabia kicking out, Saudi Arabia, Iran, both kicking out. Anybody that was attacking Israel. You're seeing the Houthis step down and no longer invading ships. You're seeing Russia. Vladimir Putin had a press conference talking about, Western ideals are not what we're fighting against, et cetera. And so that's softening. You see, yesterday, was it yesterday or the day before? One of these days that just happened, China announced that they refinanced $839 billion worth of debt for them and us as well. And you're seeing like all of these things happen just days after the election. And then on the other side of things is that what we haven't seen yet is so I'm going to start 4 years ago and go to today, or I should say 8 years ago and go to today, if we will. But if you think about when President Trump was in office, right during COVID, we had the money printing by him and Biden. You had the tariffs in China, which remained. You had the breakup of the TPP, the breakup that, all of these things happened that created an inflationary environment. And then that's perpetuated by things like the Green New Deal and all of that money printing, all of the wars, both in Ukraine and in Israel that we are, aiding with. Nothing against the aiding thing. Don't come for me if you're one of those people. But it's you look at that, and all of that eventually creates inflation, and then you have. We'll see what happens, right? Presidential elections are a lot like they're basically middle school elections. We're going to give free sodas in the lunchroom and all of that. So, we're seeing President-elect Trump now saying, hey, look, another tariff on another tariff on China and trying to bring manufacturing back to the Rust Belt states. And you know what? That's not what's going to really fix the economy there. And that's been known over and over, but it will improve some things for sure. But it's still going to create an inflationary environment. And, all chickens come home to roost at a certain point. And when that inflation happens, what does the Fed do, right? It has to drive up interest rates. Could we enter in a late 70s, early 80s stagflation? That was a popular term that shot interest rates up to 24, 26%. And there's just a lot of things that should, it's a wait and see, but is there money to be made? Absolutely. I've seen it in, Chris doesn't know this, but I had a meeting today with one of our clients, and she was just nearly in tears, her and her husband, with how grateful they were to see their account finally grow, to be in an investment that's finally growing, and be poised to take advantage of that big pop that we had this last week in the stock market. She was eternally grateful, and said just the best things. That's what it's about. It's about Chris and I both have a talent. Your skill and your gift is not for you, it's for the world. And Chris and I both have a gift that we've been given, and it's not for us, it's for the world. And we're trying to help people, just like yourself, help people build wealth. And I think there's definite opportunity. I think 2025 will kind of rally up, level off. 2026, I think we get a pullback, and we'll see 2026, 2027, I think will be down years, and then push on out. So it'll be interesting to say the least, but there's definitely opportunity there.
Chris.
Yeah, I agree. I've got an image here. If I can share the screen, Brandon, let me just share something I thought was interesting. Let's go. So one thing that's what I'm noticing in China right now is, the government is stepping in and doing all sorts of support. They're lifting animal spirits. A lot of that, I think, is also to front run the potential the tariff war and issues that we might be having in 2025. So right now it's like basically all systems go, produce as much as you can, export as much as you can before prices change and prices go up. Or, obviously there's more friction in the global economy. If you can see my screen here, this is the Trump trade from 2016, and basically it's like, well, if we were to overlay it again into 2024, the top left-hand corner is the S&P, which shows that the S&P would have room to run from bottom left to top right. You've got U.S. equities versus the rest of the world. This actually shows an outperformance by the rest of the world compared to U.S. equities. You got small cap versus large cap, which is essentially up and then back down to flat. You got bond yields, which are up a ton, and that is my biggest concern going into 2025 is watching the U.S. 10-year yield. I can talk about that in a second. Real yield is essentially up as well. Again, inflationary, breakdown inflation or break-even inflation with tips and everything like that would be sideways. 2 and 10 years showing the 2 and 10, the 10 getting bigger, that would disinvert further. The one thing we should be watching would be the 10-year 3-month, because if that disinverts, that's going to be another major sign where there's a recession likely close by. U.S. dollar showing up initially and then fading. Dollar versus Chinese yuan showing dollar gaining strength over the yuan. Gold actually dips quite heavy and then rallies. Chinese equity surprisingly going up, which I'm watching that closely as well. And then Bitcoin, which Brandon, I texted you this weekend. Bitcoin's over 80K, and looks like momentum is on its way to 100K. So that's going to get pretty exciting, probably pretty soon. I mean, a pullback is fine, a flag is fine, but I mean, look, man, 100K is right around the corner, and I think this market wants to rip.
Chris, let me jump in. Bitcoin, either earlier this year or late last year, whatever it was. As a matter of fact, what was that called? FTX.
FTX, yeah, with Bank Friedman.
Yep.
Yeah.
It went down to, I think, 15,000 or 16,000 or something when all that happened. I mean, what if we just would have bought 3, 4, 5 of those things? Like, it's really had an incredible run. So yeah, so 80,000.
Yeah, but you can't say that during FTX when it's like everything seemed like crypto was a freaking scam. So I mean, you got to understand, it's like I've said all along that it's risk capital. I've been comfortable with 3% allocation, 5% allocation, 10% allocation. I mean, I've gotten more and more comfortable with it. Like personally, I've got about 10 to 15% of my assets in Bitcoin. Do I think I want more than that? No, because I want to trade options and trade the way that I trade so I can generate the income and profit
Exactly.
that I want. But I will say that, I'm glad that I bought more IBIT during this entire accumulation zone. I'm glad that I bought IBIT when they went for a SEC approved ETF. I'm glad that I will be trading IBIT with shares already to own for myself and clients when the OCC and the CFTC approve option trading on IBIT. So, I mean, we're in a good position. I'm not saying we're ahead of the game. We're in a good position just to see good trading, good flows, and it's risk capital, because at some point, maybe Bitcoin is not going to be the greatest thing ever, but there's no complaints on how good it is right now. And also it's interesting to see, like, gold's been great too. I'm actually happy that gold has actually pulled back and offered a bit of a discount. So I'll look to see if we get more. We're at the 50 moving average. I'd like to see it pull back a little bit more. So I'll wait. Dollar has levels to fade at higher levels. I mentioned earlier the 10-year yield. I want to talk about that for a moment. And James, I want your feedback on this. Look, I don't know how the Fed can be so happy and so proud of themselves for navigating this tiny little soft landing, thread the needle, perfect example of, like, we're at all-time highs in this and all-time highs in this, and the market's outperforming this and blah, blah, blah. That's great. But I'm telling you that the bond market is not treating the equities market like it's a good thing, because basically the bond market front ran, or I mean, it ran the buy the rumor, sell the news so textbook, because the day that the Fed cut 50 basis points in September, we had right before that the 10-year actually bottomed, and this thing is ripping way higher. So I'd say for the health of the US economy and the health of the Fed not reacting and breaking something, this 10-year yield better go down, because if this goes higher, we are going to see any type of debt resurfacing or any type of debt restructuring and refinancing in 2025 and 2026 put so much strain on the economy. We already have one of the most unaffordable, if not the most unaffordable housing market we have ever had. If people are going to refi homes, it's not going to happen at 7.5, 8% interest rates. If people want to buy new homes, it's not going to happen when prices are all-time high at 7, 8% interest rates. If businesses have to restructure at 8, 9, 10 plus percent, it's not going to happen. You're going to see a wave of delinquencies, and I don't know. It's like, this is potentially in the U.S., in my opinion, one of the biggest problems that may occur. Now, I could be wrong where this thing doesn't go up any further and the market sees that it settles down and it's like, okay, we ran up here, the Fed cut, and they're going to cut again in December, and the market's ripping higher, and maybe it settles down. But tariffs are inflationary, and if we go into a hard trade war in 2025, I don't know how the market all of a sudden doesn't take that as inflationary. We also have CPI data this coming week, and it's forecasted. I don't know if it's popped up on the economic calendar yet, but I'm pretty sure it's not forecasted to be less than 2.3, which was a miss last month when it said 2.4 was the actual year over year. And the core PC still sits at 2.6 right now. So let's see if they put in a forecast for this week. It should be Wednesday's release. So let's go this week, Wednesday's release, and we're looking at 2.4 is forecasted. James, what do you think? They coming in 2.4 this week, dude?
I don't think so, quite honestly.
Atlanta, I think it's Cleveland Fed said 2.6 to 2.68.
Yeah, I would say around 2.6, 2.8, 2.6. Yeah, exactly. Just like the Atlanta Fed said. One of the things that you may want to throw up there too, instead of just the 10-year yield, if you look at the bond market, so ZB would be a good ticker symbol on that.
Yep.
That's a bond futures.
Yep.
You can see that bond futures are down, even though interest rates are down, and bonds have an inverse relationship with interest rates.
Bonds down, yield up.
Yeah. And that is
That's not a good thing.
It's not a good thing. So you're seeing, and this is right as that next wave of baby boomers are coming in and retiring, and this is scary things for people.
And you've got two distinct personalities that stick out with me that have been vocal saying that they are short bonds, and that is Stanley Druckenmiller and Paul Tudor Jones. They are shorting bonds. Now, if they're shorting bonds, that means they are long yields.
Yep.
Whether they're one side or the other, it's like that is a trade that is going to be potentially something that breaks. And look, if the bond market gets beat up so badly, it will absolutely weigh on equities. You can't just have the bond market dropping, off a cliff, and all of a sudden equities just keeps ripping to all-time highs. It's going to drag big
That's
time.
because of debt. Because whenever you have,
Absolutely.
a company has to have companies use debt to invest in capital, invest in new projects, and if they can't get the debt and can't get the money, well, there's only a certain amount way that companies make money. They either sell more, they cut costs, or they raise they raise guidance in their stock and they get investors in their stock. Right. So debt,
cost
equity,
of capital is
all-time highs.
I was going to say one of the all-time highs, if not like it's got to be up there where one of the worst times in history to be like borrowing at what feels like, look, we've had 2 decades of money printing, 2 decades of easy credit, 2 decades of you can finance whatever you want. And it still had a little bit of that injection with the carryover through 2020 because of what we did during COVID. I listened to a podcast today. This guy was actually he was like one of the youngest cabinet members of the Reagan administration. I can't think of his name. I think it's something Stockman or anyway, it doesn't matter. But he was saying that basically we had a GDP growth of around 6x since the Reagan administration, and we've had a debt of 36x. That's crazy. Like you are outpacing your debt to GDP growth by 600%, man.
That's crazy.
It's insane. And so, look, and this is not a doom and gloom. This is just to say, this is the iceberg that is staring the U.S. straight in the face. And I don't think that the Fed can just maneuver around it and miss it. I don't think we can just have like a debt reset, like nothing's going to happen, like no consequences. So, again, I go back to this. This is why I trade. This is why, having protection and being able to hedge and make sure that, black swan events might happen. It might be, and there's 2 ways to look at this. It might be something that happens internally in the U.S. and something breaks, and all of a sudden the U.S. leads the way and the entire global market melts down because the U.S. is actually in pretty good shape compared to other countries right now. And so if you look at Europe, you look at China, you look at, emerging markets, none of them are performing as well as the U.S. And so I think either one, the U.S. starts to crack with things like this, where it's debt and it's refinancing and it's delinquencies and it's the yields and all these things that it's like the Fed all of a sudden starts to pause, or possibly worst case, I think they would have to raise in 2025. Now, that's not what they want to do at all. I mean, the Fed doesn't want to look like idiots. These are 12 of the most powerful people in the world that have all this influence on the markets and all this influence on their mandates. But if they have to react to something that breaks, all bets are off, and you're going to see tons of deleveraging and running for the fire exits. But the flip side of that is, okay, maybe the U.S. has enough momentum to just keep getting drifted higher, and the can is going to get kicked down the road as long as it possibly can. But maybe something breaks in Europe. Maybe something breaks in the UK. Maybe something breaks in China. Maybe something breaks elsewhere. We've had this conflict going on in the Middle East. It's still happening. I don't know if the floor breaks in oil. If oil breaks below $65, do we have another escalated war somewhere because your OPEC countries or oil dependent countries can't afford to produce sub $50 oil dollars per barrel, but the US and Saudi Arabia can? So, there's a lot of stuff out there that don't seem great, but we're sitting here at all-time highs. And I will say, and Brandon knows this, Brandon, you're essentially 5 for 5 in the trades we took the last couple of weeks. I'm 24 for 24 with the same strategy that I taught you. It's just, you keep trading. And James, I appreciate you saying that with the client stuff, because we're in a good spot. We've got some happy clients this year. That's the whole point. We've just been grinding all year. Could I have been more aggressive? Yep. Could I have not taken a single trade and single hedge and just be like, nope, I'm just fully bullish? Yep. Could I have had an extra maybe 6 to 8% because I didn't hedge at all? Probably. But we made money in August when the market dipped hard. If we have let's say the market backfills this giant gap we just saw when the election blew it off on Wednesday. If we backfill this thing for a 3 to 4% correction, I'll be fine. We'll be fine. The end of the day, it's like, risk is always going to be under control for me. There's going to be hedges when appropriate. And when the market gets rich in these valuations, we hit 6,000 for the S&P. How many recordings do we have to go back, Brandon, to talk about? That's what we said. We think 6,000 was realistic. So, it's not a surprise. It's not like, oh my God, we never expected this. It's like, we thought there was a good runway for this market to continue to run and melt up, and nothing really broke it. The scariest thing we saw all year was what happened in Japan in late July, early August, because it was the Japanese deleveraging briefly, as well as a very soft, scary looking labor market. And all of a sudden, a month later, Like it never happened. And we're back up to all-time highs, and this market didn't give crap about it. So, and then of course they rip on the Fed and say it was premature. They should have only cut 25 basis points. Well, it's easy to say that shit in hindsight. But the reality is, yeah, I agree with the Fed for cutting 50 basis points because that gave the runway because there was no Fed in October. And if we had crappy data in October, which we had fine data, it was okay. It wasn't like amazing. But if we had mediocre data in October, the market probably would have kicked it even further if we sold off in September. So, I mean, it shoulda, coulda, woulda. But at the end of the day, we're sitting here at all-time highs on the S&P and the NASDAQ and the Dow. The Russell made a huge catch-up trade, and we're not at all-time highs yet, but damn close. This was actually one of our really good trades last week too, James. We had some positions that were running through the end of the year into January on the Russell. I had some January, February expirations, and this popped to the upside, paid us about 85% of those profits, and I'm like, good enough. I'm taking the profit. I don't want the exposure. I found that screenshot where like small caps, large caps basically stay the same. I would rather be in quality going into 2025 versus quantity. So small caps to me, maybe there's a bit of an outperformance, maybe. But I think if we have a period where the markets get nervous, your small caps are the first to drop. And what we did see, just a couple weeks ago with earnings is the Mag 7 didn't necessarily it didn't really show off how great it is. It was fine. It was adequate earnings, but you can't see Nvidia's not growing at 30x multiple anymore. Like Nvidia's kind of tapering. It's still growing. It still looks good. AI is still a thing. Infrastructure is still a thing, obviously. But all the stuff that's out there, it's like, I just think it's going to be an interesting, next year, especially. So, look, I think the market was more excited to have Trump in. I think a red sweep, which we still don't have decided. I think I looked at this. What is it? The House hasn't been decided yet. It's like 213 to 203, and the House needs 218 to seal the deal. So the Republicans are knocking the door of owning the House. Senate's already concluded. Presidential election concluded on the popular and electoral side. So it could be a red sweep. And you got to wonder what that means for, the capitalistic side of the economy as well as the social side. Hopefully there's no crazy lean in social liberties. Or regression, I should say. But financially, it's I think the runway for the end of the year still looks bullish. I think a backfill of these recent gaps and stuff would make some sense, but I wouldn't be surprised if the market just freaking goes. Because what do we have now? The election's out of the way. The Fed's out of the way. Everything looks okay. China's still trying to lift animal spirits at the end of the year. It's holiday time in just a couple of weeks. Seasonality kicks in. It's all these things are the orbit, and the orbit's already happening. It's momentum time, it's gravity time, and I think this still drifts higher. And then there might be a January reality check, but I don't think we're going to pull back too much. Like James has mentioned this too. It's like having a Wall Street, or having a Main Street recession, but having a Wall Street pause or pullback. Yep. So I could see something like that happening where the real, proverbial shit hits the fan. When we start to see look, if I see the 10-year yield up above 5%. Dude, I'm calling countdown time to this market's going to do something pretty nasty. Yep. So, but if we're not there yet, if we see the 10-year dip, I'm good with it. I think that's what the market needs to see before things get really, really bad. And this week, Wednesday inflation will be interesting. I don't think they're going to come in 2.4. If they do, I call bullshit on that. I really do. So, but whatever. Data's the data.
What's crazy is that with all of even with the yields and all of that, the VIX is still extremely low. It's at 14.9.
Yep.
And we're not seeing that spike up once, but there is a gap in the VIX, and we know markets don't like gaps, to put it back over 20. And that's that telltale sign of maybe we're going to see a little bit of a pullback. And
sure,
people, I think we will get a little bit of that as well, of a pullback and a correction to fill these gaps in everything that was created around the election, because, well, he's not in office yet. We still got a couple months there. Yep. It's lame duck Congress and lame duck presidency. And so what's going to happen, and it's, and I'm sure he'll say, literally, I just saw a thing on some news site. Hold on, let me find this headline again, because it's quite interesting. It was something to the effect of Elon Musk is supporting a ban on the Federal Reserve. But yeah, in the Fed, Elon Musk endorsed his plan to let presidents meddle with Federal Reserve after Trump election win. So he's already. So who knows what that does to the market, right?
Yeah, but does Tesla does it go to the moon now? I mean,
It's already been to the moon.
It's
right?
already going, man. Yeah, it's going to Mars next. No,
Yeah.
I'm bullish on Tesla. I just thought this is. I mean, I've been watching this pattern for literally 6 months, and I just thought if we clear 280, I'm long. So I have tons of option trades. We got good exposure on this. They're all looking pretty solid. Any dip and pullback, any backfill, like I said, I'm looking to add some more exposure. All I'm looking at is all-time highs. I mean,
Yep.
for me, the trade is here. This is the breakout. I could see a lot of stocks over the next 12 months not necessarily going to all-time highs. Like a stock like this, I mean, rips all the way back up. I mean, you go from, I mean, it was up 29% last week. Is that right? Let me look at the look at this heat map. 29.1%, 29.01%. That's insane. That is insane.
One of the interesting things that's
trillion
going on with there's two things going on with Tesla. I've spoken, ad infinitum about the AI chip things that they've created, right? They have an AI chip that's faster than what NVIDIA's newest chip. They have the fastest on the market. Eventually, that's going to be able to be for sale. Elon's already kind of outlaid, hey, we want to bring this to market, but we have to be able to manufacture them at scale because we know it's going to create demand, which that may spell two big problems for NVIDIA, and I'll get to those in a second. But the other is, so after the hurricane that happened in Western North Carolina, I know it's been, reported a bunch now that that's one of the richest areas for lithium in the U.S. It's actually the largest lithium deposit and silicon deposit in the United States. And one of the things is he is giving people money for their land and writing those checks, and then does he own a mine at that point in time? Who knows? I'm not trying to, this isn't tinfoil, it's still cloth, but I don't got the tinfoil hat on yet. But I am just putting two and two together there. The thing I was going to say about NVIDIA though, with the chips is a lot of people don't know. And if you go through their earnings statement, their cash flow statement, there's a line item on there for lending, because what they do is they lend. So you can take a loan again when you're purchasing the chips if you're part of a certain level of manufacturer, right? Or user. So like, I'll just say, if I wanted an NVIDIA chip, they're not giving me a loan. I got to pay for it. But if Facebook wants them or Meta wants them, they'll loan against the value. But what do they collateralize that loan with is the actual chip.
Right.
So it's a loan on the product. Well, if the company decides to switch the product out, they said they can just default the loan and whatever that comes off their books in 90 to 120 days, and that hurts NVIDIA 2 times at that point. So I don't think it's like reality check. There's also a first to market benefit here. They're still innovating. They're still they landed government contracts. They're still growing. I don't think that there's like a sell all your NVIDIA yet. But
just wait for Nancy Pelosi to buy somebody else.
Exactly. So just be aware of things. And but Tesla, I've held it. I bought it at 220. Held and still holding right now in it, and probably gonna just, when I see it get a little bit weak and kind of base for a second and just consolidate there for a little bit, then I'll probably move a stop up or something to make sure I lock in, some profit. But right now I'm just, I think it's bullish opportunity.
Yeah, I think we got a pretty good runway towards 400, man. I mean, there's so much enthusiasm here. Basically, it's like just because Elon Musk is now like in the inner circle of the president or the soon to be president. The stock, I mean, it's so funny, man, because was it not in here that everything was like, oh, he's a wild card, oh my gosh, he's going rogue? It's like people like the stock swings on the sentiment of whether you like Elon Musk or not, and it's like now he's liked, now he's in the right club now. It's like, it's insane what this stock has done. But from a technical standpoint, I'm still looking at it just as a simple breakout. Is it worth $400 a share based on valuations? Who knows? But if it gets there, I'm taking profit. So I'm
Well,
going to be pretty aggressive in this area.
one amazing thing that's recently come out is silicon batteries. So batteries made from silicon,
Yep.
they conduct electricity better, they hold charges better, and they have larger capacity than lithium batteries, and they're cheaper to manufacture. And we have everything we need in the US to do it right now, basically.
Yeah.
All the minerals and all of that exist right here. We don't have to export, import anything, and we can those could go into and switch into cars quickly. And so now you're getting, the 200-mile EV is now going 400 to 500-mile EV because the batteries are lighter. You can pack more in there and pack more charge. So that may be something that we see kind of announced from them. One stock I want you to bring up just to show it. Mm-hmm. Bring up DJT.
Oh, I know.
Have you seen this drop?
Yeah.
I mean, the colossal drop of all drops. Oh, you got to keep going down.
Oh,
it had okay. So you have it up. Yeah, it dropped like from its highs to the date of the election.
They halted it several times.
Yeah.
So it's down 51% from the surge in the polls, and it's like that was a high here Tuesday the 29th, and down 51% from that high.
Yeah. And that's Donald Trump's Truth Social and his media platform.
Yeah. James, did you and I text on this that this thing's worth like $7 billion and he owns 57% of it? Did we text on that?
Yep.
I'm like, now this guy is a freaking billionaire for real.
Yep, exactly.
Which is ridiculous. And it's on the coattails of like the stock market and doing something like post election and 37 felonies and what's like, we have a felon in office. It's like nobody seems to give a crap. First time in history, but hey, whatever, man. He's the guy for the job.
He'll pardon himself, right?
Very true.
Pardon me. Oh, I just did.
I did it, but I'm not guilty of it. So
amazing.
So is DJT going to go back up? Is it going to hit the all-time high?
I'm taking a defined risk trade on here. It's out to next Friday, but it's like so everyone that was in Kalshi and Polymarket and everyone they're trying to say that the polls are dead now because of all the betting activity that was happening. There's only one U.S. market. I think it was Polymarket that was allowed for the U.S. and then Robinhood started to mess around with it too, like the week before the election. But these betting markets that were moving the lines had Trump favored at like 62 to 63%, and they proved to be right. So you got to wonder, and I don't know, I mean, maybe it was a fluke, but you got to wonder if that type of traction and that type of like galvanized base is willing to put their money on the line and go vote for the guy, right? And so you wonder like, okay, so the 2028 election, do we see that the betting markets are actually showing a better like a better actual like tally for what the polls might end up showing during election day? And in this case, it was true. It's like you saw Trump win. I mean, Electoral College was a landslide. Popular vote percentage wise, I think it was like 74 to 71 million or something like that. So either way, I mean, I could care less about this stock. I think the whole thing's a joke. It's like, but if it goes up on him getting elected, it's like, well, I got a little bull call spread in here. If I lose on this one, I'm losing 39 cents on the dollar. If I win, I get paid 61 cents on the dollar. I'll probably take another stab at it, just go out further. I mean, if this transfers into 2025, then yeah, I'll take another trade that's very low risk and high reward, and I'll double the contracts where, okay, so math wise would be this. If I take a loss for 39 cents and then I have a win at 61 cents on the next one, okay, but I take double the contract size, I'm up $1.22 for a loss of 39 cents, and I win one, lose one. I still make money.
Yeah.
So anyway, I'll probably take some defined risk trades on it, but I'm not going crazy speculation on this.
I just thought it was interesting how quick it dropped after the election, and it was trading was halted and all of that. It's a very interesting thing to see.
Donald Trump world, something's interesting.
Well, we're going to hear about it for 4 more years. So
that's for sure.
Every day you're going to hear about how great this guy is.
So, okay, listen, we got a lot going on, and let us know, give us 2 stocks that the average person should be taking a look at, dollar cost averaging into, or, whatever. What would you do?
I'm trying to think how long ago I talked about this, Brandon, but probably 6+ months ago, maybe in the beginning of the year, we had this conversation. And I say this because I've had a handful of friends that have reached out to me and said, hey, what should I do? And I just said, look, if you're not going to be like super if you're not going to be super active, then whatever you're comfortable with, once a month, once a quarter, like if you've got an extra $100, $500, $1,000, whatever, buy Amazon. That's all I said. So Amazon for the year, let's go year to date. Year to date on Amazon comes in right in this area. Let me see when it exactly started. Right about here. Okay. So in this area, Amazon is up around 37%. Now, that's not Nvidia, that's not Carvana, that's not, freaking Eli Lilly. It's like, I get it. But Amazon, in my opinion, is still going to be one of the breadwinners in the economy. It's going to be one of the biggest companies in the world with the best logistics in the world. I know they face some threats with what's happening with like Temu and Shein and some of those like quick to, just dirt cheap Chinese manufacturers that can just basically copy and clone everything and get it to people on the cheap. But I don't know. I just think Amazon is a great company to have. And any dips and pullbacks, I'm still interested in dollar cost averaging into it. At some point with this split, we're trading at 208 right now. If you give Amazon a decade, I think the stock's gonna be $1,000 again, just like Apple will be $1,000 and Google and all these companies that did like 10-for-1 splits. They'll all be $1,000 again. Then they'll split again. So I still think the Mag 7 is truly a special basket of stocks, just because it's the largest tech in the world that is so big and so powerful. Unless the government shuts them down, they will buy every competitor that threatens them.
Right.
So there's of course and this is what I think the future holds. There will be companies with ChatGPT and AI that can still produce, maybe $10 billion worth of revenue, but they'll never be on the blip of being a publicly traded company. So the Mag 7 might be here to stay as like the one big publicly traded entity, while other companies still exist and they just have way less people, or, all your good people at Google go do their own startup and they all make their fortunes, but just to a much smaller scale. I have no idea. But I don't know. I think Amazon to me is like one of my favorites. I've been in that one for years. I know Netflix is probably another one, even though it did get a little expensive here. I got to ask you guys, James will pick out a stock here in a moment. Who are you taking on Friday? You taking Tyson or Jake Paul?
And I'm taking Tyson. Come on now.
I know. James, what do you think?
If Jake Paul has paid Tyson well enough, he may
$20 million to take a phantom punch. You never know.
Exactly. I mean, who knows? But if it was a real, if it's real, Tyson all day.
Yeah,
all day.
I mean, look at that man train. I wouldn't stand in front of him.
That guy's 58 years old. I would never want to take a punch from that dude.
I wouldn't want to hold his pads.
I know. You see that guy as his sparring partner getting the crap picked out of him.
Exactly.
Yeah. Anyway, that's on Friday. I'm actually kind of excited for it.
Me too.
Yep. All right, James, what do you got?
So one stock I really do like, and I have liked for a long, long time. I bought it back in, it was like literally, I think in 21 or 22. Yeah, it was 22. I paid $6.54 for this little baby and still have it today. Palantir.
Yeah,
you knew it. You knew it. I didn't have to. I was looking at my charts. I wasn't even looking at your screen. Yeah. That is a gem of a company. They are just the absolute stalwart for tech security. And I think we're in, I talk about Ray Dalio a lot. He's one of my favorites. And he talks about 5 types of wars. I'm not going to get into all 5, but he says technology wars is a war. And your data security is the number one of the most important things. And they are the best at doing that. That's why they just were awarded a multi-billion, multi-decade contract with the U.S. Department of Defense. Yeah. So you look at that. They started with the FDA, and since 23 to now, what was that percentage wise?
Oh man, it was like 700%.
Yeah. Like, I mean, it was one of those that popped on when it first came out, and 700%. Yep. That's a stock that I've absolutely loved for quite a long time. And then the other that if I'm just putting money aside and just do passive investing, is more than likely I'm looking at something like Meta if it's a stock, but if I can go futures, I'm going the MES all day. But Meta, I think, has a great forward-looking way of things, and they're getting into the product space, and that's one of the things that I think is going to make Meta so much more profitable. I don't know if you watched, Zuckerberg now does like a Steve Jobs-esque launch day with their products. They launched those Ray-Ban sunglasses, which has been massive bottom line producer for them. And the next thing that they've done is just glasses, just like regular glasses, not a VR headset thick thing that you have to power, but it does augmented reality and virtual reality. And so they're super lightweight. They had them there for demos. There's no release date on them yet, just because they have to source parts and manufacture and get the supply chain correct. But it was that tool alone has Apple dropping the Vision Pro, partnering with Meta to do a cheaper version. Yep. Apple is literally not going to be selling the Vision Pro in a little while because it's so expensive and nobody bought it. But Meta is taking that space, and that's what I love to see, is like companies that innovate but also understand the A to Z process of what it takes to innovate. Mm-hmm. Like, I think Fisker was a loss of that one, and that's why they were doomed for failure. I think Rivian is going to be a doomed for failure kind of company. Yep. And I think it will be kind of absorbed by another manufacturer. But I think that someone like a company like Meta and a company like Palantir are two tech plays that I love right now. And then, I mean, you can't go wrong with just buying the ES if you want the whole S&P 500, right?
Yeah, dude, just buy the SPY, man. The man that dies with the SPY wins. That's what the saying is. And honestly, Brandon, can I do a quick plug for a second? I think we talked about this a couple of weeks ago.
Yeah.
I have this course that I did. It's $497, and just because I spent a lot of time on this, and all it is this. James trades options. I trade options. It's about 90% of my Streamwise Capital portfolio. We're sitting at about 40% cash right now because I'm curious, like, okay, the election, if we have any crazy opportunities. And even now going into these all-time highs, I'm like, I love the melt up. And I mean, James and I are invoicing clients right now, and we picked a high back in October that has been blasted through that. So I mean, we've got some nice like profits rolling into the next year that we're going to be just basically padding our 2025 stats with, which is great. And there's more to come. But my point is, I just thought, if somebody were to teach me how to trade options, this is what I did. I built a course where I'm like, I taught myself over years and years and years. I read all the textbooks. I took all these courses, and it's so complicated just to get a basic, like, practical class on options. And so here's what I do. I have a PDF that goes with this, which is my strategy guide. It's my version of like an options 101, nice little introduction, key terms, which are not the most enjoyable. Like it's just industry standard stuff, but these are the definitions that you hear. What's a long call versus a sell call or short call? What's delta? What about intrinsic volatility? What about like all these things? Like, they're just definitions, and it sucks. But when you know them, you check them off the box. What are the Greeks? What are the shortcuts? All this stuff. Anyway, go into a risk graph, get into the options chain. I go through like 4 different broker platforms to show you. They all look the same. Brandon, I get on with these calls with you, and we go through Thinkorswim. I got Tasty Trade. I've got Schwab web platforms, Thinkorswim web. I got Robinhood. I got Webull. I've used all these different broker platforms. They're all the same, right? You just have to learn how to navigate them. And then I walk through the strategy guide in full in a video. I give you the whole PDF to go with it. But then I get into the strategies. What's a buy call strategy versus a buy put? What about doing a bullish spread, right? So if you want to express a trade to be bullish, what I like about these are defined risk, defined risk, defined risk, defined risk, and then undefined risk. Okay. And so I'm just giving you 13 of my favorite option strategies because I think that's what I trade all the time. And if I want to see something happen in the market and I'm like, all right, I'm bullish on this. Well, I've got a bunch of different strategies to trade, and it really can be that simple. So I just think if I could go back and teach myself how to trade options from scratch, this is what the course would be. So I'm hoping that if anybody's interested in learning how to trade options, this is a great way to start. And, I'm open to any feedback but I don't think it's going to be too confusing because I've thought about all that stuff. I know that options as a whole can be very overwhelming, and it has a weird vocabulary to go with it. But the reality is, okay, what does this actually mean? How do I break this down in the market, and what do I do with it? And options is bar none the greatest asset to ever trade, in my opinion. It is. I've taken an $8 million currency fund and I've rolled all of it into trading stocks and options and futures and crypto and whatever I can now. But it's like, because I can trade options, the risk management is so much better. So much better.
Okay.
We have had a silky smooth year this year. So anyway,
So real quick, in the last 20 trades you've done, how many have you lost?
0.
Thank you. Okay.
Yep.
Enough said. All right, guys, let's get it going next week. We're going to bring Eric on the tail end and let him chat a little bit about yield farming, and we're going to have a great week, and I'll talk to you both tomorrow.
All right. Sounds good.
Thanks, guys.
Later.
See you.
So listen, I mean, this is about as good as it gets. So enjoy, learn, and buy Chris's course. You know, it's not expensive, and you get to learn, and he doesn't like to lose at anything. So anyway, let's bring on Eric, because I haven't seen my buddy in a long time. Where have you been? I hope you're doing well. You're having fun. You're placing liquidity trade. What's going on, buddy? You all right?
Well, I had a hip surgery. I have a new titanium hip, and so that kind of took me out for about 3 weeks. I mean, it's kind of amazing how they can just pop that sucker in there in less than 4 hours.
God bless my mother.
But the pain from the surgery and the medication just kind of really put my head in a cloud there.
Good.
So today is the first day I'm actually coherent again. And actually, believe it or not, the last couple of days, I feel great though. The pain's gone from the hip. It's starting to go. The surgery pain's starting to go away too. So, but it's amazing that I can get out there and walk around right after that surgery.
Take 2 minutes. Tell us about our course. Tell us where we are. Have there been any updates?
Yeah, I'm telling you, the game. You know, the thing about my course right now is to get on the biweekly calls, because that's where I'm giving out the latest picks that I'm in, and the game is getting easier and easier. It's not getting harder, but you do have to pay attention to what to get in and out of. We did have a one pick that I had OBN USDC that the entire equity value got cut in half like within 2 days, but we were still earning, and we actually made all that money back because of the Trump effect that just happened, and a new pool that opened up with Bitcoin and versus Ethereum on the base blockchain. So that pool has an automated system that you can run on it, and I mean it's just probably going to do 20% a month. And the beauty of it is then you're in 2 major cryptos on both sides, Ethereum and BTC. So you're not locking in any losses on US dollar. So it makes sense. You can trade it like you would, if you want to actively trade it, you could trade it like you would trade the actual currencies themselves. And so this is a new development, but I'm finding that every 2 or 3 weeks now, there's a new development that warrants getting on the every 2-week calls that we do, because it's just hard to keep up with, and I'm changing positions around a lot. So that's really the meat in the course. Just show up every 2 weeks, because I don't get a chance to post a new video every time. But bottom line is, whether you have any experience in crypto or not, it's time to get in. The course will get you up to speed within 5 hours. You'll be in trading. And if you just attend the biweekly calls, you're going to be doing very, very well. I mean, we haven't really the beauty of this, of trading in the pools, is whether the market's up or down, we're making money. So even when we had an equity position get cut in half, it's still spitting out great returns. We could have just held that position and we would have just got half as much as we normally do. But every day we're earning money that you can spend, and it's getting easier and easier. So I was just listening to the commentary, and I was about 4 weeks ago, I was on a cruise with a bunch of big investment advisors, and they were economists, and they gave a presentation that pretty much said that we're on our way to a recession in the next 12 to 18 months, whether we like it or not. I think we're in a really unpredictable market space that across the board. But when it comes to the pools, you're going to keep earning,
Yeah.
and if you have any hesitancy, you can pull out of them at any time you want, and you can just go right back into them. So it's not something you have to actively trade or pay much attention to.
And the underlying asset is going to fluctuate. And so if you're patient with that fluctuation, you do a little technical analysis, you might find that it's a stressless situation, right? And eventually the fees will outweigh the underlying asset anyway, right?
Right, and now that they have these new pairs on base, it's a whole other world. I mean, now you don't even have to worry about. It's just getting easier and easier. Like I said, every day there's new tools coming out every day, and there are new pairs and new exchanges coming out where they're really incentivizing people to just deposit their currency into pools and collect fees from everybody's trading. So it's getting easier. It's not getting harder. Obviously, we had the Trump effect, which really buoyed up any equity that we had in question. But the earnings are just, they're nonstop, whether the market's up or down.
All right. Well, listen, thank you as usual. We'll see you next week. Let's have some great growth and let's help our community get some wins.
Absolutely, man.
All right. Thank you, my friend.
Yeah.
All right, guys, listen. Eric is back. His hip is perfect. He's ready to either golf, ski, play basketball, or do the bump. Anybody know what the bump is? Eric knows what the bump is because he's got a new hip, and I love it. So let's get his course. His course is $1,500. It's gone up because he's got automation. He's got so many other things that are going on with it, and I'm proud that he's a part of the Core 4 family. And let's grow together. You guys, listen, I don't like to take any more than up to an hour for us to get together and talk. And so we're just chatting a little bit about our journey. We're not financial advisors. So guess what? We're on our own. The journey is yours, and I love you whether you like it or not. Thank you, guys. See you next week.